Hey guys, welcome back to the channel. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead in the stock market. Before we get into it, please hit that thumbs up for the video. And if you are new, consider subscribing to our channel. We're going to start right here with the earnings, which we start with every week. So we're going to see a couple more chip makers have earnings. Now, you all saw what NVIDIA did last week. All right. It really brought up and raised every ship, right, in the ocean. Now, we'll see how long that lasts, but AI is, currently in a bubble right now. That does not mean that can't continue. But, right here, this is what we're looking at. We have on Wednesday that C3.ai. We have Broadcom on Thursday. So just be careful when trading through earnings with options because you're paying high premiums, right, before the report comes out. And then after the report comes out, well, that just drops drastically. So if you don't get that move in your favor, then you're going to be waking up the next day not very happy. Okay, now going into our economic calendar for the week. Monday, all the markets are closed due to Memorial Day weekend. Memorial Day is on Monday, so we don't start up until Tuesday. We have on Friday the U.S. employment report. This is the jobs report on Friday. That's going to be the biggest thing that happens in the coming week. Now, you have the Beige Book on Wednesday. That can sometimes give that behind-the-scenes look at the economy through what the Fed sees in their different districts. All right, so that's on Wednesday, and that's pretty much it on the economic calendar. But like I said, Friday is the big one. Last week we saw the PCE. That's something that we were really paying attention to. Now, we got a hotter than expected PCE, and the market went straight up. This is the market we're in right now, right? So usually you would get, hot inflation numbers, the market would tank, right? Thinking that the Fed is going to need to raise rates higher for longer, keep them there. That didn't happen on Friday, all right? It's a very interesting thing that's going on where you have these, 7 tech stocks that are basically buoying the entire market. Even more than that. I mean, it's really been crazy. So that was last week. Now, what was shown in the PCE. So if we come over here to this website, bee.gov, you can take a look for yourself. We can click on the current release. So this was released, obviously, last week in May for April. So we can look back and see where inflation is coming, going, etc. Now, what we look at is the PCE down here, excluding food and energy. That's called the core PCE. This is super important. This is what the Fed looks at to get that 2% inflation target that they're looking for. Well, it rose to 4.7% now, and that's year over year. This is still way too high. We were expecting 0.3% on the core. We saw 0.4%. So the core PCE year over year, like I said, is 4.7%. They were expecting 4.6%. Just basically showing that inflation, that services inflation is here. It's sticky. The Fed is not going to be able to stop with rates and trying to get that down. So we really need to watch this. Even though the stock market has been going up, be careful. All right. This is not a good number. All right, guys, I just wanted to show you something interesting, a very interesting statement here. Now, this guy, David Rosenberg, he's usually very bearish, right? He plays a lot of the contrarian views. We all know that he's a bear, but he makes an interesting point here with this right here. There are breadth measures for the S&P 500 that are the worst since 1999. just 7 mega cap have accounted for 90% of this year's price performance. 90% of the S&P 500's gains have come from just those 7 stocks. All right. You look at the tech weighting in the S&P 500, and it's now up to 27%. In a video last week or the week before, I showed that the weighting for the S&P 500 was 20% for those stocks. It's now 27%, where it was heading into 2000 as the dot-com bubble was peaking out and soon to roll over in spectacular fashion. So mega cap tech outperforms, and he sees ominous trading activity in banks, consumer discretionary, stocks, transports. So anyway, those stocks are acting like the same pattern they had going into the last 4 recessions. We all know, it's very obvious, that those 7 stocks are the entire market right now. If anything were to happen to those 7 stocks for any reason, you can see the market will have a very, very big downturn. So just be aware. Now, there's anything that can bring something like that down. Government, regulations on AI, even just the talk of that. There's a lot of interesting things that we're not even talking about as far as recession. AI has taken over. If you look at the bond yields, very clearly inverted. All right, this has not changed. This is crazy inversion. This usually does not happen without a recession coming. Outside of those 7 stocks, the market would barely be up this year. All right, there's definitely something going on under the hood. So just be careful with, just jumping in with all the bulls at this point. Now, I don't suggest to be super bearish, because you could have been like that all year and just gotten crushed the entire year so far. So just realize, I would look at, certain things like the RSI. If it's super overbought, I would look to start to trim some of those positions that you may have on certain stocks, certain indexes, etc. So looking at the groups, looking at the sectors, their relative performance, we can see year to date. Like I said, communication services. This is Meta, Google, technology. You have Apple, Microsoft, Nvidia, Amazon. These are the stocks that are carrying the entire market. If we look at the 1 month, look what has been really suffering. All those defensive plays that were so hot last year. Technology, just everybody's jumping on that AI. And that's what we saw last week on Friday. There's no new story here, okay? The defensives are suffering, and you have super outperformance within those stocks. Going over to our compass, the SPY. So this is something that we all look at to determine how strong the market is and where we see the market possibly going. SPY is also an ETF that just tracks the S&P 500. It's something that we all trade using options. It's very liquid. It's a great thing to day trade, swing trade. So, using a little technical analysis, some indicators, some volume, we try to predict where the market looks like it may be going. Now, nobody can tell you for sure, but that's just what we do here on our weekly watch list videos, just to give us, a better idea of the possible moves. So the SPY right now, currently sitting at 420, currently the highest close since back in August of last year. So the market has been very strong. The only thing is, this market, the SPY, has about 7 or 8 stocks that are carrying the entire market. About 30% of the SPY now consists by weighting of Apple, Microsoft, Google, Tesla, Nvidia, Amazon, those types of stocks. So while the market is sitting at highs almost for the past year, right? It's only being held up by that few set of stocks. Those stocks are looking extremely overbought right now. And the stocks that make up those 500 stocks in the S&P 500 are simply not as strong. The SPY wouldn't even be up on the year if it wasn't for those stocks. So just keep that in mind. We're at that 420. This has been resistance around SPX 4200. So, that's all going to be very critical. We have seen a ton of consolidation here, and I'll bring up the volume here in just a second for you guys so you can see. I like to look at where all the volume has taken place. Now, on the past year of trading, so every one of these candlesticks represents one day. Now, I know I repeat that a lot, but if you're new to these videos, I want you to know, if you're a beginner, that this is the daily chart, and each candle represents one trading day. So what we have seen for the past year is we've seen some nice volume ledges setting in as support. So when you're above that, right, you break out of that, your support is going to be where there was a lot of volume that took place. So you had support down here at about 390 to 380s right here, the bottom end of this area. And then you had this point of control right here, which a ton of volume has taken place for the past year. We're kind of trying to break out of that. So we have a lot of support on the daily chart below us. You have the point of control. You have all this volume. You have the 50 moving average. You have the 200 moving average. So right now, to me, the S&P 500 looks like it has a lot of support underneath it, a lot of demand, right? And not much above it. Now, hold on just a second. We don't have a lot above it for the past year's worth of volume for the SPY. But if you look at this, the last 3 years, right, you can start to see, and maybe the weekly will look a little bit easier to see. You can start to see here as we get higher. This is the weekly chart now. So each one of these candlesticks represents an entire week of trading. You start to see some overhead supply. The overhead supply I have pegged right here at about 430 to about 454. That looks like a lot of overhead supply. A lot of volume taking place here in the past 3 years, especially on this run up, after the COVID pandemic. And now that might act as resistance. But we have some nice, areas down here for support. A lot of volume down here. So the S&P 500, I would think, it does look like some nice moves, but keeping in mind, you need the rest of the market to participate, not just those 7 stocks. If you do get that participation and the market breadth gets a little bit wider, then maybe you can see a test at this area, this 440. There's a lot of volume taking place here. It's definitely going to be that overhead supply. All right. So that's what I would look at. See if the other stocks start to participate in the rally that we're seeing in the overall market, or those 7 or 8 stocks in the QQQ. But that's what I see so far for the S&P 500. Coming over to the QQQ on the weekly chart, this is looking extremely overbought. Okay. RSI on the weekly, overbought. That doesn't mean that it can't continue. You've seen with tech before that the RSI, just because it gets overbought, can't continue, right? So you have here almost an entire month worth of being overbought. It has happened before. It can continue. What I see on the weekly, the last 3 years of data here, the volume ledge I see is 370 to just about 355. All right. So we have a lot of support down below, a lot of support, but that's going to be that next area of contention right here. where we see that overhead supply. That's on the Qs. Looking at it on the daily chart, I mean, that's crazy. That move is insane. RSI high. It's been high since about May 17th or so. So about 10 days worth of the RSI being overbought. And then we have that right at the top here of the volume for the year. So for the past year, this volume that we saw here was all taking place on last Friday. All right. So there's nothing else for the year that took place here. This is the highest close for the year. And, the market's looking extremely strong. But like I said, overbought. These are straight up candles that usually will need to pull back a little bit. So we hit 349.25 during the regular session, closed at 348.40. So we're going to be looking again at that 349.25 area to see if that breaks in Tuesday's session, and then start to look for the possible areas that it could pull back and find support at. You have some volume here at 337, 338 area. That would look like a very nice area to pull back and see if there's support here. It's previous resistance right here. So this is where I would be looking for a pullback eventually. All right, so that's the QQQ. All right, now taking a look at a couple of stocks. AI has been everything for the market, right? AI bubble, whatever you want to call it, that is why the markets are, sitting close to yearly highs. The QQQ is at yearly highs, but NVIDIA made all-time highs. Look at this weekly chart on NVIDIA. Look at that volume up there on NVIDIA. That is a lot of shorts covering. That's also a lot of people late to the party, jumping in. The earnings were amazing. If we look at this on the daily chart, this is where you can see that really big gap right here. That is going to be in the volume chart. So if we look at this on the volume, taking a look, you can see that big gap here. A lot of times the charts, right, like to fill in gaps. So to fill this gap, you would have 318.78. Now, if you look at this on the 3-year, that gap would be more to about there. Okay, so the top here, previous all-time highs, so that's 347. And then if that breaks down, the next area there would be 318.78. These are things I'm going to be looking at for NVIDIA, not necessarily next week, but in the coming weeks to eventually fill some of that gap. All right, so that's on NVIDIA. Okay, now looking at Apple. Apple on the weekly chart made a high that we have not seen on a weekly close since back here in 2021. Wow, that's very impressive. Looking at this on the daily chart, you can see that it's coming to the top end of this range. Previous highs, right? Previous high back here, touched in one session and then sold off. Now we're more consolidating, which is looking more like there's a base trying to be built here. So we just have to wait and see here if this is going to continue or not. It did make the highest close here in a year as well on Friday. So Apple looking for a breakout, definitely possible here. And support is at 171. The breakout area is currently in the process of happening. We have to see how Tuesday opens up and see if we can, continue that move up on Apple. All right, so now Meta has seen a very nice move. This is the weekly chart with the volume profile shown. You can see right here that a lot of supply, a lot of consolidation happened right here. Okay, so after earnings, that bad, to start 2022, just totally tanked, and it's now come back up into that previous consolidation. So Meta is now back there. Where will the top of that consolidation be? Possibly towards the top end of this volume for the last year. But, Meta looking very strong, also looking very overbought, just like the rest of these stocks. They're all looking overbought. If they pull back at all, you can expect the QQQ to pull back as well. All right, so I hope you guys enjoyed the video. Just a few stocks here to keep on watch. They will influence the market, so you need to keep in mind and watch these. So yeah, hit the thumbs up, and I will see you back on the next one. Thank you.